Welcome to Target Market Insights, the multifamily and marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Welcome to Target Market Insights, the multifamily and marketing show. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. Now, if you're enjoying this show, do me one little favor, all right? I need you to leave that 5-star rating and review. And if you have any questions, please feel free to reach out to me. You can reach me at john@kasmancapital.com. Now, today we're going to be talking to my man, Devin Elder. Devin is the founder of DJE Texas Management Group, a vertically integrated multifamily real estate firm based in Central Texas. Now, Devin is also the host of the DJE Podcast Weekly Show and the co-founder of ApartmentEducators.com. Let's welcome to the show, Devin Elder.
John, nice to see you. Thanks for having me.
Absolutely. Devin, we had you on the show previously, and it's good to have you back on again. For our listeners who missed our first episode, why don't you give us a minute or two of a little bit on your background?
Yeah, absolutely. Great to be on again, and feels like it was not too long ago, but I think it's been a couple of years now. So I appreciate you having me back on. I went to school like a lot of people. I went to college. I got the degree. I started working for a big employer here in my hometown of San Antonio and was in the corporate world for about a decade. And at some point in there, I started out pretty gung-ho in corporate, and that lasted a few years. I had a lot of energy, kind of started an entry-level role, and the shine started to wear off of that corporate world after a few years, and I started looking for alternatives. At some point in there, I had a turning point where I said, this is not going to be it for me. I must be an entrepreneur in order to not only fulfill my financial goals, but I think I'm also just kind of wired that way. So that led me to real estate. I started out flipping houses. I started out doing rental houses, then flipping houses, but always with an eye to get into multifamily, to get into the big stuff. So that's what we do now. I've moved, my firm into the multifamily space. We're in San Antonio. We buy typically 100 to 300 unit apartment complexes here in our backyard, and that's what we work on today.
Awesome, Devin. Love that story. And I think that's really relatable for a lot of people, right? So starting out in corporate America, kind of going down that path, realizing that you really wanted to be an entrepreneur, transitioning into real estate, starting with single families, both doing rentals and flips before progressing onto larger multifamily deals. And I know you're based in kind of Central Texas. A lot of your holdings are in San Antonio, but maybe you give us a little bit more context on the geographic landscape of where you do business.
Yeah, it's really almost all in San Antonio. We just sold a deal last week. It was 128 units in a little town called Seguin, which, depending on who you ask, is almost a part of San Antonio, kind of 45 minutes away. But San Antonio itself is, believe it or not, it's like the 7th largest metro in the country. It's crazy. You would never think it would be on that list, but we really fly under the radar next to Dallas, Houston, and Austin, Texas is getting a tremendous amount of press, right? Tesla announced they're building the factory there. Joe Rogan's moving to Austin. What more evidence do you need that Austin's becoming the center of the universe? So that's great. They can have that. Traffic's really bad in Austin. It's a cool town, but man, I like to visit. And we still benefit. San Antonio is about an hour south of Austin, much slower town. Less rent growth. In terms of investments, it's more of an operator's market. We're kind of slow and steady, and we kind of like it that way. And to make deals work in San Antonio, you really have to operate them real tight. And so that's why we continue to focus on stuff that's just in our backyard. That way we can develop a lot of competencies and it's little things. It's like in terms of a vendor list, in terms of people we're hiring. We might have seen them before. We know people that have hired them before. And it's little nuances like that help us stand out as an operator, because we've got this deep knowledge of one market. And the market, at least right now, talking in 2020, has done well. We're continuing to see positive migration trends, but it's not such an insanely hot market that I get concerned about it being too hot. It's just San Antonio has always been kind of slow and steady. And even though we've seen good growth the last couple of years, it's still kind of that market. And I have no problem flying under the radar next to some of my other Texas markets.
Yeah, you mentioned vertical integration, how important it is to be kind of an operator in a market like that. Explain a little bit more about kind of your process to getting vertically integrated. One, what does that mean for you? And then two, why did you decide to be vertically integrated?
Yeah, that's a great question. The easy definition of it is that we own the property management company that runs our properties. So we started out, well, really started out flipping houses, right? I mean, it's just kind of a one-man show. That's grown into essentially what is a private equity firm, right? We go do a deal. We raise $3, $4, $5, $6, $7 million from private investors that invest alongside us in our deals. And so that was a big focus building the company. And during that time building, I didn't have the bandwidth to have a management company or anything like that. So it was always third-party management for us for a number of years. And there's pros and cons. I was a proponent of third-party management for a number of years just because I wasn't going to start a management company. But at some point, like just about all of our decisions in business have come through pain, right? I don't necessarily make decisions because this would be a fun thing to try. I make decisions a lot because I've got some sort of pain point and I need to resolve it. In this case, it was a pain point on a management company that we had on a couple of our assets. And there was just a lot of fat in the expenses. There was a lot of glossing over things, and that just wasn't going to cut it for our return profile, right? So we had to improve that. So we basically I decided within the last year to start a management company, and that really revolved around a key hire, somebody I had a relationship with that was extremely competent in the area. And it was a little, it was a leap of faith to start that new company, but we've transitioned a number of assets now, and I'm extremely pleased with that. So short answer to the question is vertically integrated for us means that we're the private equity company running the investments, but we're also the operations company handling the day-to-day now on the assets, which it just creates a tighter integration. There's no bureaucracy. We can immediately act on things. There's no decision making back and forth. I mean, we can just be really effective in implementing things quickly that we just weren't able to do before. So using third party can get it done. I know lots of great operators that use third party. We did it for years. Now we've transitioned to say, hey, we're big enough to build this out in-house. And I love it. I absolutely love that level of control. And you'll hear people say that it's all about the control, right?
Yeah, and listen, for a lot of people who are listening to this, I mean, you may be in a position where you're considering building out your own management or managing the properties yourself as opposed to working with a third party management. Maybe you can give us a little context to some of the decisions that you had to, the questions you had to ask to make a decision on, do you build this out vertically or do you continue working with third party management? And maybe you could talk about it even from kind of a smaller assets. I mean, obviously, if we're talking 100 plus units, that's one thing, but even for someone who's looking at maybe a smaller portfolio, what are some of those key questions we need to ask ourselves before making that decision to say, hey, you know what, we're going to vertically integrate and manage this thing ourselves?
Yeah, great question. It comes down to time and money. If you property management's a lot of work. If you look at what needs to happen on any asset, a 10 unit multifamily or a 300 unit multifamily, there's a leasing component, there's marketing components, which are ever evolving, whether it's Craigslist or Facebook or different paid services or geofencing. There's a lot that goes into marketing and understanding that. Then there's HR, right? I mean, if you've got a 10 unit property, you might not necessarily be hiring, a payroll number to hire anybody full time, but somebody's doing some work on the property, whether it's maintenance or leasing. If it's a smaller property, it's probably you, the owner, doing the leasing, or maybe you're paying a third party a higher percentage rate. On that small property, it might be 8 or 10% of revenue. On a bigger property, it's going to be a lower percentage. But I think you've got to ask yourself as an owner, investor, are you, on your time, do you have the bandwidth to do it? And I think a trap a lot of people fall into is they come from a high income scenario that they've worked years to get into. They're professional or doctor or dentist or something like that. And then they start doing property management, which is a big pay cut. So I think people need to be cognizant of what their hourly rate is as maybe their day job, and not be too quick to sacrifice that time and that earning ability. Also, if you're an entrepreneur, I think it's important for entrepreneurs to keep their ideal dollar per hour in mind as well, and try to shed any activities that are not delivering on that. So there's a lot to it, to managing properties, and the way we were able to grow pretty quickly is right out of the gate. We were very focused on being a private equity company and bringing on experienced third-party managers. And I'll tell you that worked for us, because there was no way I was going to manage a small property myself. That would have eaten up all my time and energy. And furthermore, I think it would have eaten up a lot of my passion and desire to grow the business. Because once you start getting bogged down in daily property management details, ooh, man, you're going to burn yourself out. And that is a huge danger for anybody that's an entrepreneur or wants to be an entrepreneur is, hey, man, you wake up in the morning and your battery's full, hopefully. And by the end of the day, it's going to be empty. And you better have spent it on good apps. You better have good apps open. You better not have bad apps open all day that will burn your battery down. And so I really, that's something I've kept in mind over the years. So third-party management companies helped us do that, helped me stay really focused on growing a private equity company, growing a portfolio. And we were able to get the returns that we wanted for investors and make it work. At some point, though, I'm looking at all these fees I'm paying out to third parties going, I'm paying a lot of money every month. I'm not satisfied with the service. And what's it going to cost to do it in-house? And look, that was a leap, because I personally wrote the check to start the management company, and it was a big dollar amount, and I didn't know if it was going to work. That was a risk on my part to say, hey, can we do this and make it work? And now that we're on the other side of it, I'm very pleased with it. But we're talking about payroll for a high-level person to run it, VP of operations. We're talking about some HR services that we use, software, other things like that are like hard monthly recurring costs for us that just would not have made sense, to me anyway, on one or two properties. It really had to be across a bigger portfolio. So hopefully that helps answer the question a little bit.
Yeah, absolutely. Time and money are the two big factors you need to look into, right? How much time do you have and how much do you equate your time, right? So if you are coming from a high salary job or a high, entrepreneur position, do you want to get down into the weeds of property management, from leasing, maintenance, and just dealing with, issues that aren't necessarily going to be huge revenue drivers versus, things and activities like finding new deals or, raising money for deals or those high dollar value activities. So I love the analogy you used, talking about waking up with our battery, right? Our battery's charged on full. You get your day going. Do you want to spend your day going after those high value opportunities, networking with other investors, finding deals, talking to brokers, trying to find that next investment opportunities, and obviously still managing the properties in a portfolio? But do you want to do those kind of things, or do you want to be talking about, the unit turn in one specific unit, or, making sure that the toilet was flushed and working properly, and making sure that, people are using Lysol to wipe down everything? There's certain things that you probably don't need to do, and you can delegate that to someone else. And certainly working with a third party management company is going to cost you money, but you have to just ask yourself, like, hey, is the value here? And I think starting out, your best bet may be to let someone else do that, especially as you can get more comfortable with what all is involved with property management. Because I think the worst thing you can do is decide to do it yourself, but you have no clue what you're actually doing, and now you're making a lot of mistakes. Versus if you work with them, you can kind of learn that process, figure out where the inefficiencies are, how you would adjust, how you would adapt, and then from there build kind of a better mousetrap, if you will. So
yeah,
really
great point. Yep.
Yeah, so absolutely. So Devin, I want to fast forward a little bit. So you've been, growing your portfolio. You mentioned that you're selling the one asset, but I know you've been really building out the PM arm of it. Are you only managing your own assets, or are you looking to be a third party property management for other investors as well?
It's predominantly the former. We started this company because I said we can do this better. We can drive efficiencies. We can drive NOI, right? End of the day, this whole name of the game is driving NOI. And really, a lot we've seen this year with COVID and everything, it made, I think, everybody take a hard look at all their expense line items and go, hey, is this really necessary? And so it's just driving those efficiencies, number one. We've had a few, I'll tell you what, we had one conversation with one potential third-party client, and we spent a little time on it, and I'm talking a couple hours. And I just thought, I thought this could eat up our whole day. It's back to that battery thing. Do we want to spend time chasing third-party clients for a little bit of revenue, and they could fire us in 6 months, and that now we've got staff that doesn't have a place to go? That doesn't sound like a lot of fun to me. So we would entertain, I think as time goes on, we would entertain bringing on clients that we already had a relationship with. Other investors, we kind of consider that. But we made a decision real early on in the property management company life cycle to say, we're fine just running our own stuff. It's almost the way our business is built. It's almost easier for us to go buy another deal for ourselves than to go find a third-party client, which is like the third-party client's going to be that much revenue. Our own deal is going to be that much revenue. So back to that thing of where do we want to spend time? And so I could see us in the future taking on some third-party clients, assuming they were a great fit and that there was mutual benefit there. But we certainly are not going to spend time chasing it. And I love being in that position.
No, I love it. Thank you for clarifying that. And I want to talk about your podcast. You've joined the ranks and the realms of the rest of us here with your podcast. And how long have you been running that now? And what actually sparked you to launch?
Yeah, so I've been running it. I think we're in like the 70s on episodes. So, and it's a weekly show. So that must be over a year now, which is
okay.
Cool. I remember actually talking to you. I think it was when I was on your podcast the first time, maybe 2 years ago, about what kind of microphone you use. I was like, John's audio quality is awesome. And then I got your mic, and then I was like, I don't get the same results. I think maybe the microphone isn't the reason there, but you got a good audio voice, man, for sure. But what did it for me was, I'd been kicking it around for a long time. I think like a lot of people, do I start this? Do I not start a podcast? My thing was, can I do this for 2 years and expect zero benefit and keep publishing every week? And if nobody downloaded it, would I still do it? And at the end of the day, I was like, yeah, I'd still do it if nobody downloaded it, because I get to have awesome conversations with people like you. I learn stuff all the time. I learn stuff on every podcast, man. I love it. And then it's a way to connect with people around the country. It's different viewpoints, which is huge. I think as an entrepreneur, we suffer sometimes from tunnel vision. Well, tunnel vision is a good thing and a focus on a goal, but we suffer sometimes, I think, from stale ideas and not getting fresh ideas, because we're running our own companies and we're kind of dictating to people how this is going, and we might not have any peers day to day, right? So I think that can be very isolating, and I think it'd be dangerous in terms of getting stagnant. And so when I can network with peers on a podcast and get ideas and share ideas, it's the best. So that's all the benefits with zero downloads, right? And that was enough to say start. Then you add the benefits of downloads, and we get introduced to new people, our guests get introduced to new people, and it's this kind of network effect that's been amazing. So it's good stuff, and it keeps me kind of forces me to keep introducing myself to new people, which I really enjoy.
No, that's awesome. And I love the way you approach that. And I tell the same thing to other people who are interested in starting a podcast. First and foremost, get real clear on what you want to get out of it. Because if you're starting a show because you want to be the next, big real estate person, you may be real disappointed when you start looking at the metrics and the download numbers and what's going on there. It's changed, right? And it's one of those things where if you started a show 5 years ago, you probably are in the top 5, top 10 percentile of real estate podcasts, just from no matter the quality, just from the mere fact that you started 5 years ago. If you're starting today, there are a lot more podcast options out there. So it's going to be more competitive and a little bit harder to break through and harder to really reach people. So you have to ask yourself, why am I doing this? What do I want to get out of it? And if you can get personal fulfillment, then that's going to make it great for you to do because you're going to enjoy sitting down, recording. There's another side of this that's a little more challenging, right? Which is the editing, the production side of it, and actually getting the shows published on a weekly basis and all the graphics and all that kind of stuff. So it takes a lot of dedication to get this thing out. But if you're committed to getting the value and making sure you love the conversations you can have, it can be an absolutely phenomenal platform to build your network and to expand your connections. So it's awesome to hear that you are, a little more than a year into it. And we had you back on, I think, right around our 1 year because you were episode 60
Okay,
on
nice.
our show. So it was right around that same time for us as well. So you got the podcast, and I know that you also have apartmenteducators.com. Tell me a little bit more about that endeavor and what sparked you to open that.
So for several years, I've been getting people reach out with the can we grab coffee email. I'm sure you get those.
Yep.
And that's great because I was the guy sending those emails years ago to other people, right? Hey, can I just get around you? Somebody that was further along. And there's no doubt I've been helped immensely in my life by mentors that were further down the road than me. So there's zero question. And I've paid a lot of money to be part of high quality groups over the years. And I credit that with, I give a lot of credit to that for any success I've had. However, running a business, having aggressive goals on growing the business, going back to that battery analogy, man, my battery goes quick and I don't have a lot of time to spend on it. So I got a lot of requests for coaching, how to do this, right? How to do what we're doing, how to get into the business and all this stuff. And finally, I just said, I can't build this company, a coaching company. There's no way I can handle the administrative, the accounting, the marketing, the systems and all that stuff. There's no way, but I can do some coaching. We can go do tours of our properties. I can jump on a phone call and coach somebody through stuff. I can share our documents that we use internally to run our business with people, but I just can't build it. I can't do the admin or the operations of that coaching company. So I partnered with a longtime friend of mine who had just had an exit from a company that he worked for. He wasn't working. He's invested with us, and we both have invested in real estate for years. Our families are friends. And I said, hey, if you don't have a job, let's start a company. You can run it in terms of the operations, and we can, leverage my company's track record and all our tools and systems and teach people. But now I don't have to be doing all the building of the company. And so that was an example of a partnership that just worked out really well. He was happy to do it because he's not going to coach people on it, but he can certainly build the company and the system. So that partnership worked out well. He actually came up with apartmenteducators.com, and it's an ecosystem to teach people how to do multifamily syndications. And we basically just take everything we do in our business, put it in there. And there's a whole series of, modules and training courses and things like that. And then we take small groups of people through coaching to get them into deals and investing in projects. So that's been cool to be able to do that because, look, I want to grow my network of people to invest with. I want to be a key principal on other people's deals, provided it's the right deal and the right operator. I want to invest with other people. And so that's been and also I want to see other people succeed and go through this, right? There's kind of a rewarding thing for me to help people through that. The same way I've been helped into this business by people that have gone before me. So part of it is that continuity. Part of it was just building a system that was scalable and that we could deliver a lot of value without me having to, build all the back end website and all that stuff, for example, right? Like I don't have the bandwidth to do it. So that's what Apartment Educators is. We were talking before, John, before we hit record, we were getting some real momentum on our live events. Earlier in the year, we've been doing Zoom stuff like a lot of people. We can't wait to get back to live events, hopefully sooner than later. But it's been real cool. Instead of going to, a lot of this genesis of that for us was we would fly out to conferences, right? Fly to Orlando, fly to Baltimore, fly to LA, fly to Las Vegas, go to conferences, ton of value. But, 3 days out there, hotel, airfare, time away from the family kind of wears you down. We wanted to get our own little mini conference going every month in San Antonio where we've got 100 people that are multifamily focused investors, not flippers or wholesalers or whatever, all multifamily people in the room networking. And then drive home at 9 p.m., in 15 minutes. And so that was selfishly one of the reasons we started this whole thing is we said, I think we could do some serious networking in our city of 1.5 million people. I guarantee you we could do some serious networking without having to get on an airplane. And so that has all been awesome. Of course, like everybody, we can't wait to get back to live events, but we'll get there.
Yeah, I think your experience, is right there with our experience as well, right? So, going out there, building it up, and especially when it comes to live events. We host the Chicago Multifamily Club, and we just held kind of our monthly virtual meetup, which is really the best we can do at this point. And even our Midwest Real Estate Networking Summit, which was exactly what you talked about. In order to go to a great conference, we had to hop on a plane and go out to, Denver or Orlando or Dallas or, on the East Coast of Philly. And great events, San Francisco, great events. But, it was like, why don't we have this in our backyard? Why don't we have this in the Midwest? Why don't we have this somewhere where it's more accessible? And we just decided to create it. And those are the same kind of logic where, as an entrepreneur, you have to identify that if something's missing, you're probably not the only person who's looking for it. And once we realized that there was an appetite for something like that, we created it. So very similar to you, that was very helpful for us to continue to grow and expand. Except now that all those in-person events have been wiped out for the foreseeable future. I want to go back to what you talked about with the apartmenteducators.com though, and I love the way you talked about really just recognizing that your time in that battery again. Recognizing that, yes, you can spend your time talking to people and pouring into them, but you really have to be careful of how you spend that time and making sure that it's a shared and mutual exchange of value. And, I can certainly relate to that as, you do spend a lot of time talking to people and trying to educate them, trying to help them get going and sharing the tips and tricks that have helped you, especially if other people have done that for you as well. But you also run into a situation where it's like, all right, there's only so much I can give you. And I don't want you to hear me say something, then run out and do it and misunderstand what I meant by that. And I certainly don't want you looking back saying like, oh, you gave me bad advice. It's like, no, you misinterpreted the advice. But nonetheless, starting that platform with a friend who had a little bit more time to build it out and to be able to grow that, I'm sure that's very beneficial for you to expand your personal network, driving deeper relationships, but also helping these people get started, get going. Has it been fulfilling for you just really, setting this program and kind of teaching and educating just to actually see people get the growth from that education?
Yeah, absolutely. I love it. That's kind of one of the most rewarding things that you can do. And I love all kind of aspects of the business, right? Buying stuff. I love, I'm a deal junkie. I love chasing after deals. I love turning properties around. I love getting good people on the team and being an employer. I love all that stuff. But I love, if you've got somebody, and this isn't everybody, but if you've got somebody that's really intelligent and motivated and all they're missing is some guidance, that's a lot of fun to work with that person. I'm not saying you can take anybody off the street and make them into this successful investor, but a handful of people, and you kind of can recognize it when you see it, that are motivated and they want to do this, man, they're a blast to work with, and to see the lights go off and to see the dots connect for them and to see them taking their own career forward is super rewarding.
Yeah, absolutely. And I think too, like trying to figure out how to really coach, right? And how to get the most out of someone. Because it's one thing to create a program and say, all right, here it is, get it and go, or to create a course or a class. It's something else to actually be more hands-on and to talk to someone. And yes, you have certain information that's available, but trying to figure out kind of more mentally, like how do you get people to overcome whatever challenges they have, whatever limiting beliefs that they have, and really get out of their own way and help them recognize that, because sometimes they're, sabotaging themselves in a way, or they're not taking the right actions, or they're not spending their time wisely, and just they need that help from someone else who's got a separate opinion, who can just look and say, hey, here's what I see you doing. Change this, change that, and let's see what the results are there. And just having someone who can help you do that, it could be big. And I know a lot of folks, there's a lot of free information available. And I tell everyone, listen, consume plenty of free stuff before you consider paying someone to be your coach or your mentor, but also get clarity on what problems you want your coach or mentor to help you solve, because mentors are not magicians. And if you are struggling with something, just like if you're trying to play basketball, well, if you're 5'2" and you're 255 pounds, you're probably not going to make it to the NBA. It's just odds, right? But, if you've got the skills, if you have the work ethic, if you have the other intangibles there, having that coach come in and mold you can certainly make it happen. But you have to make sure that you're putting in the right work and you're doing the right things. So, it's really a great opportunity to help people grow and help people expand. And, you're right. You can't take anybody off the street, but the thing I love is real estate's not that complicated. It's not like we're building a great technical app, right? It's not like we're building Facebook, but it does take a lot of hard work and persistence. And if you have somebody that can help coach you, to help you understand the nuances of how to put things together, but also just understanding more of the psychology of it, and just understanding how to make things happen, how to get out of your way, how to overcome those limiting beliefs and fears that you have, that can make life a lot easier to get across the finish line. So, coaching and mentoring is something that we're really big on. You just want to make sure you know what you're trying to solve for, so you can actually move forward. Because I think the one thing that frustrates me is when I see people hire someone and not really get the results they were looking for. And a lot of times it's because they didn't have clarity on what their expectations were or what they wanted to get coaching on. Have you either experienced that, or when you're vetting someone to be maybe a coaching student or a client, do you talk to them about those things, and how do you kind of weed out those folks who maybe are not a right fit for you?
Yeah, so we're real cognizant that this is kind of like a boutique business. We're not trying to be number one in the country in anything. We're just trying to take what we've seen is a demand and an interest for this stuff, and build a system where we can help those people that are coming to us. So yeah, we've seen that a lot. I think we're super transparent about what we offer and what we set up, and we try to take people through a simple exercise that says, hey, what's your target? And let's work backwards from there. Is it to buy 100 units as a primary operator in the next 18 months? Awesome. We have a little spreadsheet for you to fill out. It's how many doors times dollar per door. Here's about what your equity is going to need to be. Here's what your key principal is going to need to be. Here's how much capital you're going to need to raise. Here are the people you're going to need on your team. And now that you have your goal, we can reverse engineer it and plug in the gaps. That's what we'll help you do. If you don't know what your goal is, or none of that stuff, like keep listening to podcasts. You might decide this isn't for you at all, and that's fantastic. That's great. So for that person that does go through that exercise and says, yep, we want to take down, 100 units, 150 units, we want to take down a 20 unit, whatever. We just reverse engineer it real quick on a little simple Excel sheet. Says, all right, can you raise $1 million? No, I can't raise $1 million. All right, well, you're going to need to partner with somebody, or you're going to need to grow your investor base, or whatever. But that's the piece it's going to take. And for the person that says, yeah, we can raise $1 million, or me and my partner can raise $1 million, say, great. Do you have a key principle? No. Okay, here's how to plug that in. Do you have this? No, plug it in. And so we're real big on just reverse engineering the process very quickly, identifying gaps and help filling gaps. And if somebody isn't on board with that, then we don't. You don't want to spend time with us. If that's not if you can't identify a target that you at least want to start moving forward to, it's not worth anybody's time working on it.
No, I love it. I think you're spot on there. And that's a great way to go through that process and just help everybody get clarity to build a relationship. And I love the fact that you're talking about the boutique approach, because it's more personalized. It's really about helping that individual and not about trying to get, 500 people to sign up, and just trying to go for the mass quantities. You really are trying to help individuals. So I think that's the right way to do this, because there's also a lot of variances between, the challenges that one person may face versus another, and understanding what they need. While it can be systematized, I do think that it's helpful to have that more of a hands-on approach to it. All right, Devin, last time we spoke to you, we talked a little about the parts of San Antonio that were growing, kind of the hot spots of the city. I'm curious if anything has changed. Where do you see a lot of the activity and the opportunities today?
Yeah, so I know last time we talked to John about the Pearl, which is downtown,
Mhm.
or north of downtown, which is this kind of epicenter of the Renaissance of San Antonio. That continues to be amazing. You see banks putting up buildings down there since we last spoke. Frost, a big developer here in town, built a big glass building downtown as the first kind of new skyscraper in the last, I think, 26 years in San Antonio. That's gone up. That's leasing up. You're seeing a lot of downtown San Antonio living happening, which is new in the last, certainly in the last decade, and definitely in the last 5 years. We actually are investing in converting a old office space in downtown San Antonio on the Riverwalk into luxury apartments, kind of a smaller luxury apartment deal there. So downtown San Antonio is still a hot spot. And then we're seeing, for the focus of kind of more of our workforce housing type stuff, we're seeing tremendous growth west of San Antonio, right? There's just tremendous growth out that way. We bought an apartment complex in kind of northwest San Antonio last year, and they announced they're building a new hospital in that submarket, right? It's going to be this huge employer. So we're seeing a lot of that growth out there when we look at kind of the workforce housing or median income demographic. A lot of that's going out west. Certainly, a lot of it is going out north too. I mean, San Antonio and Austin are kind of bleeding together. Austin is northeast of San Antonio, so you got that I-35 corridor that's really just kind of blending into one thing. So you're seeing a ton of growth there. And then in terms of suburban growth, we're seeing a lot out just straight out north San Antonio. San Antonio is kind of interesting. You could look at it as if you look at a San Antonio as a circle, there's two loops, two concentric circles that kind of make up San Antonio. There's a giant portion in the northwest quadrant of San Antonio made up of Camp Bullis. And this is a military installation that is like hundreds of acres, maybe thousands. I think it's like, I don't know how big it is, but tens of thousands of acres now that I think about it. In the prime location of San Antonio that will never get developed. So you got everything to the west of it and everything to the east of it just going out. So in terms of workforce housing, multifamily, we tend to focus on kind of the northern cone, you could think. So downtown and then going out 45 degrees in each direction north, and that's kind of where we tend to focus. We've done deals in South San Antonio, and there's a lot of growth there. Toyota's down there. The Toyota factory is a big employer that came in the last couple of years. And again, each real estate deal is unique. So, we don't write a deal off just because it's in a certain zip code. Obviously, we're trying to avoid some of the high crime areas, but that's relatively small in San Antonio. There's really only a couple of pockets that we wouldn't buy in specifically because of crime. The rest of it is just looking at an individual deal and saying, hey, is there an opportunity here to make some improvements? Both structural capital improvements and also operations improvements. But if you look at a map of our portfolio, it's all kind of that north central corridor in San Antonio. And that's really only kind of grown since we spoke a couple of years ago.
No, awesome. Appreciate that update there. I know you also mentioned that the East and the Southeast was pretty hot a couple of years ago as well. How has that shifted over the last couple of years?
Yeah, we're continuing to see a lot of interest directly east of downtown San Antonio. So you've got, we're actually building a few houses. This is new since we spoke last. Building a few single family houses in areas, east of San Antonio that would have never supported, a $300,000 sale price, but that do now. So that's very interesting to see some of these neighborhoods turning around over there, kind of just directly east of downtown San Antonio. That continues to be big. And then again, everything around downtown in every direction is seeing a lot of appreciation. We've got stuff directly south of downtown. It's called Southtown in San Antonio. It's kind of a hip, kind of a trendy area, and you're seeing a lot of appreciation there. You're seeing some townhome developments, things like that go up. So continues to be a lot of demand for downtown San Antonio. And it's cool to see that restaurants, well, look, restaurants are having a beating in 2020, no doubt. A lot of places, any bar, restaurant, those guys are suffering. But in general, seeing restaurants downtown and kind of hot spots pop up. That's really cool. I grew up in San Antonio, and we never had that kind of stuff for the most part. And now you go downtown, to a trendy restaurant or whatever, and it's filled up, and there's young people out having fun, and it's certainly not like Austin, Texas, where it's like a big college town and it's crazy, but at least San Antonio's got some element of that where people want to be in and around downtown and that energy. So yeah, to the east and to the south, directly around downtown, all that stuff's still doing real well.
Awesome. Let's move on to our Bullseye Round.
Awesome.
All right. Give me a failure or an apparent failure that set you up for later success.
I'll give you a real clear one. During COVID, we put $100,000 hard earnest money down on a deal I had to walk away from. So $100,000, right? I could have taken, I guess, a stack of $100 bills, $100,000, probably about that big, right? If somebody's watching the video, and just light it on fire, right? Just watch it burn. So that was a failure. Through that, and that was just bad timing. I don't think I would have changed it. I did what I did with the information I had. I just picked the worst week in the last decade to put hard earnest money down on a tough deal, right? Low occupancy deal. So definitely a failure, right? Fortunately, that wasn't the type of thing that is catastrophic or business ending, right? So been fortunate that that's just kind of like a business expense and it's no fun. But what that set me up for was to get ruthless about our expenses in our business. And part of that was some of those third-party management companies. We said, hey, man, we've got some revenue there that we're giving to other people. We're going to take that. We're going to build our own company. And that was part of that was the pain of losing $100,000 and saying, if we had to reinvent this, how would we get as lean and mean as possible across the board? We had to let some vendors go. I had to let an employee go. And we started our own management company. And I never would have done all that stuff without some serious pain of losing $100,000. So
give me a digital or mobile resource you recommend for your business.
So many. The newest one that I absolutely love now that we have a team, I was a one-man show for a long time, and now we have a team, a program called Slack. It's a chat messaging. I love it. We basically have almost no internal email, and that is amazing. So that's a tool we love. There's also, I think Microsoft has Teams, and there are some other similar products, but we love Slack. In addition to Google Docs and our CRM and iPhone, all this other stuff, but Slack's awesome.
Give me the book you've recommended or gifted the most in the last year.
Yeah, there's a bunch. I think it's, to me, Gary Keller's Millionaire Investor is a standout, continues to be.
Give me a daily habit that helps you stay focused on your goals.
Yep. Daily habit is I write quite a bit. And what that does is help me kind of take out the trash, clear out my mind, and release some energy that I might be spending on certain things that are burning that battery up, that if I just put them down and write them down, they have less power and they take less energy. And that it's just like sweeping up every day. You're just sweeping it out, clean it up. That helps me tremendously to have more focus for what I need to do.
What's one thing you know now that you wish you knew when you were starting out?
Well, it's all going to be all right. There's a lot of years there, I think, where I don't know if it's going to be all right. You go do this entrepreneurial thing. And even when I was much, much younger, I was very uncertain about my future and how I was ever going to make a living or provide for a family. And it worked out great, and I think maybe it worked out great because I had that fear, and that fear drives you to work hard. But just keep working hard, keep showing up, and you catch a break at some point if you just do right by people and work your tail off.
What are you curious about right now?
I am really into the rural land business. So we've been buying rural land. I bought a ranch. It's full of animals. We bought a zebra last week, John. I have a zebra now. So that's been very fascinating. And it's been great for the kids and a really cool experience. So I'm all about the ranch life right now.
And where do you keep your pet zebra?
He's on the ranch. We got 150 acres about an hour south of San Antonio, and he's out there roaming around eating grass.
Listen, I know at one point you were doing a lot of videos. I don't know if you're still doing a lot of videos, but I need you to go get a video of this zebra on the ranch.
You got it, man.
All right. I want to check that out. I'm really curious to hear about the rural land and development. We've had a couple of conversations. Mark Podolsky has been on the show. He's big on land investing. And I'm really curious to hear more about that. So you'll have to keep me posted as you continue to expand your land empire there. But listen, Devin, always good talking to you. Really enjoyed our conversation today. You hit on a couple of things I think were really important. First and foremost, helping us understand why you made the decision to go vertical integration with your own property management company, really trying to find ways to get tight, to get lean, but also have more control over the expense line items. And I think that's something we all have to do right now is look at our business and say, where can we get lean? Where can we be more efficient? Where can we be more effective to make sure that we are good through the rest of this year, but also that we set ourselves up for a great 2021. Outside of that, you talked about, starting a podcast. I love the mindset there on making sure that it worked for you. And then if there's any other ancillary benefits, that's great. That's just an addition. And then also the coaching program, and someone who recently launched a coaching program myself, I love the fact that, your viewpoint is focused on helping people as opposed to just the revenue you can generate for your business there. And thanks for the update on San Antonio. It's always good to hear what's happening in different markets. I know we both have invested in some stuff in San Antonio, you way more than me, but, understanding that, the San Antonio market is still thriving, still seeing a lot of success, and it's still a market that people should have on their radars there. And I want to know how in the world we could get pet zebras because I didn't know this was a thing. So maybe offline we could talk about that. I didn't know you could buy zebras, but here we are. So with that said, Devin, thank you for coming on Target Market Insights, the multifamily and marketing show. We look forward to talking to you again soon.
Excellent, John. Thanks for having me. Great to catch up.